Hello, everyone, and thank you for choosing to spend part of your International Credit Union Day 2021 with World Council of Credit Unions. I know some of you, International Credit Union Day is almost over, and I know for others it's just beginning, and some of you, you're halfway in between your day. But in any case, we have a great virtual event for you today focused on building financial health for a brighter tomorrow, which is this year's ICU Day theme, of course. My name is Greg Newman. I'm Director of Communications for World Council of Credit Unions. And if this is your first International Credit Union Day celebration, just know you're part of an annual event that raises global awareness for our movement. The first ICU Day took place in 1948, and we are celebrating the 73rd anniversary of that today. And because COVID-19 continues to challenge the financial well-being of credit union members around the globe, we really see building financial health for a brighter tomorrow as the fulfillment of the global credit union mission, which is why we chose it for this year's theme. Today, we're going to hear about the current financial health of credit union members and learn about some initiatives aimed at improving member financial health in two very distinct parts of the world. Today's webinar presentations are going to be from Steve Arvis. Steve is the manager for the policy and research team with the Financial Health Network. Alexander Barbosa, head of the Treasury for Banco Cooperativo Sicredi. That's part of the Sicredi network of credit unions, our direct member organization in Brazil. And George Ototo, director of the Kenya Union of Savings and Credit Cooperatives, or KUSCO, which is also a direct member of World Council, and George also serves on the World Council Board of Directors. We are providing Spanish interpretation services for today's webinar, and you can select that option by clicking the interpreter button on the bottom of your screen. Tómese un momento para hacer clic en interpretación y elija su idioma, inglés o español. And if you have questions for our speakers today, please use the Q&A button at the bottom of your screen and type them in there. I will be asking them as time allows, but we do want to get to as many of them as we can today. So please feel free to use that Q&A button to write in any questions that you have for our speakers. Also, today's webinar is being recorded. It's going to be available later today on the World Council YouTube channel. That's at youtube.com/WOCCU. And we're going to start today with a look at the financial health of credit union members with Steve Arvis. He's a manager on the policy and research team at the Financial Health Network. Steve is passionate about improving people's financial health, and he leads work to help advance that goal. His work at the Financial Health Network mostly centers on consumer financial health measurement and the financial services sector, including recent research on the spending and savings of households around the globe and other work on the business case for financial institutions to support the financial health of their customers. He also contributes to other FHN efforts, including equity and financial health, consumer data rights, and behavioral economics. Steve holds a PhD in political science from the University of Maryland and an MA from that same program. Steve, thank you so much for being here this morning. I'll leave it to you now. The floor is yours. Thank you.
Great. And thanks so much, Greg, for that wonderful introduction. So good morning, good afternoon, or good evening, depending on where you're joining us from. I am so thrilled to be with you all today. I'd like to share a little bit about Financial Health Network before jumping into the main part of this presentation. We are a US-based national nonprofit with our headquarters in Chicago and with offices in New York City and Washington, DC. Our mission is to improve financial health for all. To us, financial health really comes about when your daily systems help you build resilience and pursue opportunities over time. And today, we're a trusted resource for business leaders, policymakers, and innovators united in a mission to improve financial health of their members, their employees, and the communities in which they serve. We really envision and really hope for a future in which all people, especially the most vulnerable, have the financial systems that they need to be resilient and to thrive. Through measurement, research, consulting, education and events, and innovation, we really try to advance awareness, understanding, and proven best practices in support of financial health. Underpinning all those efforts, we lead a network of over 160 organizations that are really also committed to improving financial health for all. Our network includes all the usual suspects in consumer finance, so big banks, processors, card networks, numerous fintechs, and electronic credit unions. Here's a bit of a roadmap of what I'm hoping to cover during our time together. So first, I'll share my overarching thesis that member financial health and what that really means for credit unions. Second, I'll briefly contrast the concepts of financial inclusion and financial health. And in making the distinction between these two concepts, my goal is really to show why we've landed on financial health at the Financial Health Network. Third, I'll talk about the importance of financial health measurement and provide an introduction to our measurement framework and our scoring system. Fourth, using this framework and this scoring, I'll show how the majority of credit union members in the US are not financially healthy. I'll also discuss how members are really looking for support from their credit unions and why supporting them isn't just the right thing to do, but it's also good for your business. Fifth, I'll zoom out from the US and show how financial health seems to be a globally understood idea and sort of what aspects of financial health look like around the world. And lastly, I'll share 3 ways that credit unions can really support the financial health of their members. My overall message today is that many credit union members face financial health challenges and that they look to their credit unions for financial health support. By understanding and supporting these financial health challenges, credit unions can create mutually beneficial relationships with their members. When you break that down, it really has 3 parts. First, it's that many credit union members do face these challenges in their financial health. Second, that members look to their credit unions for financial health support. And third, that by understanding and supporting these financial health challenges, credit unions can create relationships that are both good for the business and good for their members. So with much of my remaining time, I'll try to discuss each of these parts individually, but also show how they connect to and really build off of one another. Given that the focus of today's webinar is building financial health for a brighter tomorrow, I think it makes sense to spend a minute discussing the difference between financial inclusion and financial health. Financial inclusion and financial health aren't synonyms. In fact, we oftentimes think of financial inclusion as a necessary but not a sufficient condition for financial health. Financial inclusion is really all about access to and usage of formal financial systems. And we've experienced significant improvement in global financial inclusion over the past decade. Over 1 billion more people have access to formal financial service than did 10 years ago. And while again, access and usage are really important, so is making sure that those financial systems help you manage the day-to-day, build resilience, and pursue goals. That's where financial health comes in. Financial health is achieved when day-to-day financial systems help you build the financial resilience that you need to weather shocks and also to have the ability to pursue financial goals. There's also evidence that the core elements of our definition of financial health, the day-to-day management, the resilience, and the ability to pursue opportunities resonate and transfer outside of the US. I'll return to that part in a bit. We found at the Financial Health Network that the concepts of financial health and even financial health measurement have gained tremendous ground in the US since we started talking about them in 2014. This progress was largely created by many forward-thinking organizations that are driving for better financial health outcomes for their customers, their members, their employees, and their communities. Many within the US have used our framework and our scoring system for measuring financial health, or have partnered with our teams to make financial health a real business priority. Outside of the US, we first started to notice that the focus had really been on financial inclusion, which is why I spent some time discussing it a moment ago. What we've started to notice, though, is that there's this emerging interest in and consensus around financial health more broadly and even beyond the borders of the US. The logos on this page really represent some of the organizations, including credit unions, that are thinking seriously about financial health and financial well-being. In fact, our recent participation in a financial health working group launched by the UNSGSA, a new report by the UNCDF, conversations we've had with global stakeholders, and especially the convening of this event right now, have really only served to strengthen this belief. We think that now is a really important moment and that financial health can play a really important role in how we all can support our employees, our customers, our members, and our communities. So I'd like to turn now to how we might put financial health into a framework or even a scoring system. We've done this at the Financial Health Network by developing a framework based on 8 question indicators in 4 categories that help us better understand consumer financial health in the US, shown on the left side of this slide. Our framework and our scoring methodology are based on nearly 20 years of organizational learnings, and were constructed in consultation with industry leaders, academic research, and even policy experts. We've applied this framework and our scoring in our own nationally representative survey research, as have numerous businesses. It's worth emphasizing here that our framework was specifically designed for the US context. It's likely that part of it may need to be adapted to other contexts for it to work or to make sense of how financial health is most applicable within one's context. Our FinHealth score on the right-hand side of the slide really gives a holistic picture of one's financial health beyond looking at something like a single indicator, something such as income. We apply a scoring logic to calculate individual financial health scores that can range from 0 to 100. Based on that score, we categorize respondents as financially vulnerable, financially coping, or financially healthy. To put it a little bit differently, the higher the score, the better one's financial health is. So what does member financial health look like in the US? And what does overall financial health look like in the US? Using our nationally representative survey research, we've been able to look at both. So on the left-hand side, you see financial health for all adults in the US during 2020, and on the right-hand side for credit union members. What we see here is that most people in the US struggle with their financial health. We also see that the financial health of credit union members is slightly better than that of the overall population. But it's still really the case that 63% of credit union members struggle with at least one aspect of their financial health. And it's with this 63% where we think credit unions really have the greatest opportunity. Our research also allows us to look at what credit union members expect from their credit unions and compare that to how well those credit unions are delivering. As you can see here, 82% of credit union members expect their credit unions to help improve their financial health, but only 40% think that their credit unions are actually doing this. There's real value in closing this gap between expectations and delivery. So let's explore this value. The figures shown here show how supporting member financial health is really good for your business. Members that feel supported are more likely to recommend their credit union to others than those that don't, 88% compared to 63%. And nearly all members that feel supported report a willingness to purchase additional products and services compared to those that don't. And not displayed on this graph, but individuals that think their credit unions support their financial health also have better financial health outcomes. Up until this point, I've primarily considered financial health in the US. Important to add is that we also have good empirical evidence to think that this concept really works and resonates in other contexts. The quote shown on this slide here comes out of collaborative research we conducted in both Kenya and India a few years back. What this quote really illustrates and what we found is that people interviewed in both these locations mentioned similar types of things when describing financial health. It's about meeting day-to-day needs, being able to absorb unexpected shocks, and being able to pursue important goals. We also have rich quantitative evidence showing that the types of things we talk about when we talk about financial health are struggles for most households around the world. The bar graph here comes from an analysis I did of most recent World Value Survey data. I examined over 67,000 responses from nationally representative samples across 48 countries in order to better understand both saving and spending around the globe, which are two critical aspects of financial health. What I found was that 72% of households across the world were unable to save money, so that leftmost bar. And some might have thought that this could be a pattern that just confined to the least wealthy countries in the world, but that's not the case. Most households situated in low income, middle income, or even high income economies struggle with spending and saving. Yes, the situation looks better in some of the higher income countries, but a majority are still unable to save. What I think this tells us and what I think this means is that there's a real need for financial health support around the world and that this need is massive. So what's all this mean to credit unions? Credit unions are uniquely positioned to support member financial health because supporting members is already in your DNA. As we've discussed, supporting member financial health is also good for business, and we certainly know it's good for your members. There are three ways that we think you can support your members. First, we oftentimes tell credit unions in the early phases of their financial health journey to take the pulse of your employees and your members, measure their financial health. Measuring really lets you know where people are at and their specific pain points. In the hyperlinks on this slide, I've included a couple different resources available to help you do that. Second, products and services are really a key way in which credit unions can support the financial health of their members. It can be about retooling existing products and services, or even introducing new and cutting-edge ones to support the spending, saving, borrowing, and planning of your members. Third, partnerships can help. They may even allow you to expand into new markets, reach new members, and provide retooled or new products and services to your members at lower costs. Where your credit union starts should absolutely align with what makes the most sense for your business. And admittedly, these are just 3 ways to help. There are surely others. I'd like to end by inviting attendees to reach out and share how you're supporting the financial health of your members or how you're thinking about doing it. Thanks again for all involved in putting this amazing event together. And thank you all for attending. My email address is here, and I really do hope to hear from you.
Steve, thank you so much. I have questions of my own. I do want to make sure we let everyone else speak before we take questions from our attendees, but I think without question, some of those real simple slides you showed, they really show the value to the credit unions of supporting members' financial health and the return that you get on that. So I think that was incredibly valuable and helpful. And we'll come back to you here later in the hour. So stay tuned. Thanks, Steve. Well, now that we have an idea of what credit union members' collective financial health looks like, we're going to hear about some specific initiatives implemented by credit unions around the world to improve financial health. And we're going to begin in Brazil with Alexander Barbosa. He is the head of the treasury at Banco Cooperativo Sicredi. Alexander is responsible for 6 departments in that role: corporate finance, economic research, market relations, treasury, investment products, and the foreign exchange department, which provides services for the 108 credit unions that make up the Sicredi credit union system. Prior to becoming treasurer, Alexander worked in the risk department for 12 years. He has a master's degree in economics and a PhD in applied economics, and he's gracious enough to be with us here today. Alexander, thank you for being here, and I will let you talk about what Sicredi is doing to support members' financial health.
Good morning. Just like Steve said, good morning, good afternoon, or good evening, depending on where you are in the world at this moment. On behalf of Sicredi, I would like to thank the World Council of Credit Unions for the invitation to speak in this day of festivity for credit unions worldwide. And to you, Greg, as well, for the kind introduction and for being our host today in the webinar. I'm really honored to be part of it. Well, I have prepared some slides dividing this presentation in 3 sections. The first one is about Sicredi and its numbers. For those that do not know Sicredi yet, just some brief numbers. The second section is focused on the economic impact of credit unions in Brazil, while the third section is dedicated to the social impact and financial education program and initiatives of Sicredi. Okay, just a little bit about the origin of Sicredi, and then we move on to some actual numbers. We are pioneers. One of Sicredi's credit union was the first credit union in Latin America. It was founded in 1902 in the extreme south of Brazil, in a city called Nova Petrópolis. And it is operating till these days. It is called Pioneira, which means pioneer in English. Taking some numbers, as a system, Sicredi has 108 credit unions, over 5 million members, 30,000 employees, and over 2,000 branches all over the country. Considered as a system, Sicredi would be ranked as the 6th financial institution in Brazil, considering credit operations. Okay, moving on to the next section, I would like to share with you the output of 3 scientific studies we have made on the economic impact of credit unions and its benefits for the society. Our first study of the series was released last year, and it was aimed at measuring the economic effects of the arrival of a new credit union branch in a city, considering either if there was a bank branch there before or not. That study used a statistical technique known as difference in difference. I mean, the study number one, thank you. This technique known as difference in difference estimate is a well-known methodology in the economic literature. The results showed large and positive effects when a credit union enters in a new city. Some key results were a 5% growth in per capita GDP, whilst the number of companies grew over 15% after the arrival of a credit union. This study was acknowledged by the Brazilian Central Bank, being even mentioned by its chairman in his speeches at the time. Going to the second study, the second one of the series concluded that our branches are in smaller towns, which are mainly rural and further away from state capitals when compared to bank branches. According to the same study, while banks have on average a minimum limit of 8,000 inhabitants to open a branch in a city, a credit union may open its branches in towns with 2.3 thousand inhabitants. That's what allows us to go farther away than banks in order to make the financial inclusion of so many people that wouldn't otherwise. Our third study and last study so far quantified and made comparable the effort of credit unions in Brazil to include cities that are more adverse to the banking network when economic and demographic variables are considered. In fact, the presence of credit unions occurs in places that are more adverse to the banking service network. As a conclusion, we can say that credit unions go beyond the traditional banking network. Recently, large retail banks have even reduced the number of branches in less attractive cities, while credit unions maintain their expansion trend. Okay, going to the last section, I will speak about financial education and social impact initiatives. We truly believe in the strength of credit unions to generate positive changes to society. With Sicredi Foundation, one of our goals is to keep the essence of credit unions alive in our institution's culture through educational, cultural, social, and sustainable initiatives that expand our positive impact on the lives of members. These are the programs we work on a systemic basis. We have Programa Crescer for members to understand their role as owner of the businesses, qualifying their participation in the cooperative. Programa União Faz a Vida, or Unity Creates Life. It is about the education of children and adolescents through a teaching methodology that encourages the value of cooperation and citizenship, while social funds support local social projects of collective interest aimed at education, culture, sports, health, environment, safety, and social inclusion. The School Cooperatives Program seeks to expand the learning opportunities of children and adolescents experiencing the values and principles of cooperativism. And finally, Programa Cooperação na Ponta do Lápis, or Cooperation at the Tip of the Pencil, which I will touch upon later. On financial education, our actions target members and non-members, businesses, and the communities where Sicredi is present, encouraging consensus and prosperous attitudes for money management, and giving support to small enterprises in the process of establishing themselves in the market. We have systemic actions in financial education, such as the Cooperation at the Tip of the Pencil program and the National Financial Education Week initiative, as well as local actions by each credit union. We are also working on the development of an indicator for each of our members, which is called Financial Health Index, that will help us to target financial education actions, as well as to measure the financial education performance. About the Cooperation at the Tip of the Pencil program, a key feature is that it is based on economic psychology and behavioral economics in order to help people become aware of their relationship with money management. And in that sense, the role of Sicredi is to be an agent to help people that wants to change their behaviors towards their own financial decisions. The idea is not to simply give a spreadsheet to help financial planning for our members, but rather to make people understand their behaviors and change it if they want to. We built the program structure and provided it to our credit unions, consisting of a technical guidance, a methodology, presentations, guides, tutorials, and games. Education experts were involved in this construction. The structure of the program defined 4 groups for the first phase, with actions developed for each one of them, be it individual person, corporate, adolescents, and children. We promoted around 4,000 actions that together provided awareness for more than 5.5 million people among the different audiences that the program targeted. For kids, we distributed more than 4 million comic books of a famous character in Brazil that you can see in the slide, containing financial education subjects. In the second phase, 3 workshops were created for members, employees, and for teachers in schools, helping them to include financial education in the classes. Each group is exposed to stories with characters with different behaviors toward financial day-to-day decisions. People start to identify themselves with the characters and their behaviors. Then we provide specific contents to upgrade their financial status, searching for an equilibrium, or even to increase their income, something that was very important during pandemic times. This program has an impact not only for those people targeted directly, but also in people that live together with them. For instance, members talk to their friends, children talk with their parents, spreading financial education lessons they took in the program. Okay, so at the end, my takeaways are the following. Credit unions go to small and distant cities, even the less economic attractive ones, to be closer to its members, generating positive impact to the communities when it arrives. Our social programs cover financial education, reaching even schools and teachers in order to promote a healthier and more conscientious financial life among our members, employees, and communities. These are some examples on how we are helping to build financial health for a brighter tomorrow. I hope it will help other credit unions to have new ideas to improve its own actions. Thanks. Thank you. Thank you, Greg, and everyone.
Thank you, Alexander. You know, it's interesting. I always thought once I got to be an adult that I'd look back and it was odd to me that there was not more financial education for children, especially. You mentioned that children's program, and I got good financial advice from my home, but I know a lot of people don't. And there was really nothing in school. There was nothing in the community that provided that. So that's really interesting, and I think a good model for perhaps others to follow. So thank you. Hold tight. We'll get to some questions for you here in a minute. Again, if you do have questions for either Steve, Alexander, or George coming up, use the Q&A button at the bottom of your screen. You can put your questions in there, and we'll answer them as time allows. It looks like we will have some time here at the end to answer some of those questions. So we're going to move across the Atlantic Ocean now to see how our member association in Kenya is attempting to improve financial health with George Atoto. He's the managing director of the Kenya Union of Savings and Credit Cooperatives Limited, or KUSCO. It's a post he's held since 2010. George has also been a member of the World Council Board of Directors since 2016. He's been awarded a state commendation in the category of the Moran of the Order of the Burning Spear for his development of savings and credit cooperatives in Kenya. George holds an MBA in finance, as well as a Bachelor's of Law and a Bachelor of Arts in Mathematics and Economics. He's also a certified public accountant and an international credit union development educator. He's here to talk today about KUSCO's efforts to expand financial literacy among savings and credit cooperative members in Kenya. George, thanks for being here, and I'll turn it over to you now. Looks like you're muted,
Thank
George.
you, Greg. And everyone, good evening, good morning, good afternoon, wherever you are. Now, when we look at the issue of the financial health in itself, we are basically talking about 3 issues. One of them is the issue of financial security. Another one is just the freedom, financial freedom, and then the financial control. But then, under this financial health, we are basically just looking at how an individual is capable of meeting the current and ongoing financial obligations. Though this is a definition from the United Nations Capital Development, which I kept on discussing with my people and telling them that Professor Stiglitz will laugh at us on this. But when we look at financial security, it's just the ability to meet current and ongoing commitments. But then these commitments also include expenses such as for food, rent, bills, debt payments, education, health, but also includes expected expenditures. Of course, in all the situations, we don't have a crystal ball to foretell the future, how it's going to look like. Now, when we look at the freedom, financial freedom itself, then this is just a financial condition beyond financial security, and is more subjective in this situation, and just encompasses or emphasizes on individual financial goals and the things one values. Of course, we value very different things in life. Some would value the normal recurrent expenditures, others would value antiques that they would always hope to sell in the future. But again, we must have what we call the financial control, which is just our ability to feel in charge of our own finances and a belief of self-efficacy that we can ride off a situation of financial stress. Now, as I had mentioned earlier, sometimes it becomes difficult to foretell what is going to happen. And this is a very objective concept. Different people may earn the same amount of money, may live under the same conditions, but then they have different financial controls. And the impulse spending you are also aware of. There are a bit of financial jargons in financial health in the next slide. And we have things to do with the income, where we are talking about the entire amount of money received on a regular basis. Then we also have the cash flow, which is just the total amount of money being transferred into and out of a business or one's bank account or what we call pockets. But I want to overemphasize on this issue of cash flow to mention that a cash flow is king. Cash itself is king. In most cases, I was once you're traveling out of the country, even if you have a credit card, also have cash because technology can always fail you. And I have experienced that a lot. So what we need to know is that the cash flow is the lifeblood of any household or a business or an individual. You can own the entire city of Washington, D.C. But if you don't have the cash flow, you can still be taken through the insolvency proceedings. Then we have what we call capital, which is the wealth in form of or other forms of asset. This is just for emergency purposes, or it is cash in hand, or cash which is in high or high liquid investments. But we also have an investment. In this case, we are saying make a plan to help your capital grow over time, and also the issues to do with the standard of living, which is just guaranteeing one the most possible comfort due to prudent financial planning. In this situation, we are emphasizing prudent financial planning. But we also need to understand money, the financial understanding, which is use of your own capital, and ask yourself what you want to spend in. And then we have assets which are just valuable. In most cases, you need to have different portfolios and portfolio concentration in terms of the assets that you're having. You should have those ones which are fixed, those ones which are liquid, and those ones which are at call or short notice. But at the end of it all, for those who have families, we need to have family security, which is just the understanding they need to address, and providing for this family through.
Hey, George.
Yes.
This is Greg. I just a suggestion. I know your network bandwidth is a little bit low. We might have you consider turning off your camera for the rest of the presentation because your microphone is fine, but it's breaking up a little because of the connection. So I think that might help it. Thank you.
Thank you. Now you're good?
Yes.
Now, we measure financial health in credit unions to gauge the outcome of consumers' use of financial services and also the success of the financial sector as a whole in meeting the population needs. Also, just to examine the financial capability of a population, such as to measure the success of financial education. In all situations that we have when we talk about financial health, we realize that financial education is key. Now, we look at the benefits of financial literacy, and one of the benefits is that it reduces vulnerability of predatory lenders, for example, and also to help us increase the financial satisfaction and reduce expenses. We need to eliminate or minimize the cost or the price at which we pay for anything that we acquire. But again, we need to promote more savings and investments. As you are aware, investments is a function of savings. But we also look at the issue of the better management of personal finances. Without managing our finances well as individuals or as institutions, then it means we cannot progress. We also need to reduce what we call the financial stress and anxiety. And in this case, when we reduce this kind of stress, we also eliminate the chances of easily falling ill. But we also need to have budgets and also to keep the records of the expenditures that we engage in. And above all, we need to properly manage our debts and at the same time ensure that when we retire, then we have planned for that retirement well. The issue of financial satisfaction in this case is just our ability to handle financial obligations. That includes emergencies and debt, level savings, and money for our future needs. Now, we are all aware that for most of us who are engaged in paid employment, whenever we don't have a salary, we can easily degenerate into financial distress. But we have quite a number of challenges that we have also encountered in terms of the circles executing financial literacy programs in order to bring in the financial education. One of them is the budgetary constraints, which we normally face. Lack of money for these institutions to commit to train their members has been a problem in our country. But we also lack what I would call the user-friendly curriculum on this in this area. The use of self-help books does not help much from what we have seen. Again, we have members who are unable to read and comprehend what probably is written in English language, and we have very little translations. We also have the element of lack of commitment from members. A number of members behave as if they know it all, but at the end of it all, you realize that they don't really understand how to manage money. Then we also have incorrect culture and beliefs which concerns money. In our situation, some of our members believe that the more you spend, the more you get, and that normally leads to financial distress. Now, some of the strategies that we have used in this country that we have realized is cheap or affordable and enables our members to interact with financial literacy training is the use of bulk SMSs on financial health. Also, we do use mainstream media articles and news briefs to send out there to the members. We also incorporate financial health courses in school curriculum. This has not been very successful because of the behavior of the Ministry of Education, but we also do programs at accessible venues in the sense that we pin even notices and information and brochures about financial education in the banking also of credit unions. Others border on even sponsoring. In this case, not just a few members, but also credit unions whose board members do not understand how to manage their finances. Sometimes we sponsor them for financial literacy workshops, like what we are having at the moment where I am. Then we occasionally use chiefs and local administrators during the public meetings in their localities to talk about the financial health, more so in the rural areas. And that we have also seen is quite effective. But for the youth, which we've been trying, but it becomes a problem because of the behavior of the youth, has been the use of online platforms, the webinars, the YouTubes, the Facebooks, the Twitter, LinkedIn, the WhatsApp, and the TikTok. But it is a little bit hard to monitor that, I mean, in terms of its impact on these youths. Now, the element of education and training is also a very effective tool. The last 10 years, we have been training board members, the members of the credit unions, and also going to their institutions on what we call in-house trainings, and also in national and regional training workshops. But occasionally, we also organize for international exposure visits and also benchmarking visits in developed markets like the USA, UK, to help our people also understand what is happening on the other side. About 4 years ago, we had what we call the Kenya Youth Employment Skills Program. And in our situation, we were targeting youth in different counties of Bungoma, because our country is subdivided into 47 counties. So we piloted with a few, and we trained. And our main interest was to train them on how to recruit new members as youths, how to mobilize the savings, how to offer also credit support to the youths who are in entrepreneurship. And so far, we did this and managed to train their management committees and their staff together with their delegates. And we also provided a simple software to process data for them. And in agreement with the KS program, we also capitalized part of their operations. 30,000 youths were targeted in this case, and our main interest was to help them improve their market, to acquire relevant skills which are relevant to the business skills that they were handling. To date, we can show a few photos, like when we were in Garissa County training the youth bunge circles. We faced a bit of challenges in terms of the culture there towards either whether it is to be Sharia compliant product or a normal circle product. So, but still they attended and we trained them. We I had already mentioned that we share out information in terms of LinkedIn, YouTube's, and in the next, we have a circle called Tabasuri, which was doing trainings on savings. You can see the membership. In the other one, we have the use of local administrators, as I had mentioned earlier, in a local environment, and we were given an opportunity to train the locals on financial literacy. You can see it is under a tree, and for people who know Kenya, they would probably say that the right picture there, picture on the photo on the right hand side, is actually in an environment which is predominantly pastoralist and with a lot of wild animals, including lions. But I think lions fear financial literacy, so they kept off. In the next photo, we have also another United Nations circle, which was doing training again on transform your relationship with money, personal finance management. On the other one, you can see articles. An example of one of the articles where I was talking about the World Savings Day. That was a day similar to today. And that was in one of our dailies. The other example is there's a customized message of Safaricom Circle. You can see clearly how do you find ourselves in bad debt. One of them is lack of a lack of a budget. The other one is multiple borrowing without a plan. How to correct this? Consolidate all your debt, live within your means, make major changes, e.g. lower your spending habits, stick to a budget. You can see all this is geared towards financial health. And then the other one is about using a riddle to kind of make members understand that there will always be a rainy day. So how well prepared are you for tomorrow with the Kidapu Sacco? A Sacco in this situation is an equivalent of credit union. Save for tomorrow. You can see the message is very clear. On the other one, we are giving a situation where we're talking about use of Facebook, and this is on national television, NTV. Money makes money, and the money that money makes more money. That was a quote from Benjamin Franklin. And so saving in a circle allows your money to earn interest on deposits and give you access to affordable loans. Join a circle and start saving today. Now, when it came to the other article on the SMEs section, I was talking about high dividends or cheap loans, the circle dilemma. And I was advising the circles generally to increase access to finance, but reduce the cost of finance because they were overcharging the same members in the pretext of giving them dividends and interest on the same loans, and they are the same people. Basically, that's how we cover it. But I can conclude that the importance of financial health cannot be overemphasized. And empowering members with the right knowledge will ensure that they make responsible decisions in managing their money. And this will contribute to increased uptake of SACCO products, specifically savings and loans. And actually here, our loans are savings driven. So thank you, Greg. And I do hope that the credit union movement will continue to offer financial education to our members. Thank you.
Thank you, George, and thanks for rolling with some technical issues there. We appreciate it. It definitely helped, and that was a great presentation. I mean, I think both you and Alexander showed some real concrete ways that your credit unions and your credit union systems are doing things for members, both current members and the youth as well. So excellent examples from both of you. We got about 11 or 12 minutes left here, so I do want to go to some questions. And George, you can feel free to bring your camera up now if you'd like. We have a couple questions already, and actually both are for Steve Arvis. So Steve, we'll come back to you first. One One attendee wants to know if first of all, if the details, well, I'll kind of ask you both of these, you can answer them in order, but one wants to know if the details of kind of how to apply that financial health score system that you've created can be used for the participants here for their local use for their members. And then also just another question about whether or not you have any idea of the sense of the financial inclusion and health globally, in particular Canada.
Yeah, those are both excellent questions, and I'll try to answer them in the order in which you asked them. So pertaining to the first question, I think that there are some of the parts of our framework, so our 8 indicators and our 4 categories that are applicable across different contexts. I think one of the things that we encourage, especially for those that are interested in trying to apply our framework and our scoring in other contexts, is really first take a look at the 8 questions we have, which are publicly available, happy to share again too, and really see what makes the most sense for your context. So, as I alluded to in the presentation, things like credit scoring or insurance within a country are going to be things where the context really matters. So as to the second question, as for what financial health and financial inclusion looks like in the global context, I think so. Some of the information I presented talked about spending and saving in the global context. And so I think we have a little bit there. I don't think we have a real rich sense overall of what financial health looks like for all of the categories and all the indicators we think of. In terms of financial inclusion, I would point to some recent UN research, which is what I had actually cited about this increase in financial inclusion. More specifically, the question about the Canadian context, I think we've come across some research that shows some of the financial health struggles and challenges in the US mirror those within the Canadian context. I think the obvious exception being as it pertains to the planning of the insurance part of it. We've actually seen and worked with a number of organizations in Canada that have started to apply and use either the framework or parts of it, specifically some Canadian credit unions.
And if anybody's interested, I see, Steve, that your colleague at the Financial Health Network, Brenton Peck, just put up in the chat, if anyone's interested, a link to that scoring system. If you want to check that out, it's right there in the chat. Again, if you have any questions for any of the speakers, please use the Q&A button at the bottom of your screen to ask them. One of the things I'm curious about, we saw Steve's slide earlier that showed that if you really do provide that financial health and that financial literacy support to your members, you do see a return on that with your products and services. And I guess this is for Alexander and George, but I'll start with you, Alexander. Does Security see that as well, that there is a return on that investment in making sure that you are providing that financial health support?
Yeah, Greg. For sure, we believe that financial education is something that will have a reward, so to say, not only to the member, but also to the credit union itself. So usually when our members come to our branches or want credit, we are like it's like we are like an advisor for him, and so the more he knows about what he needs, the better it will be, not only for him, but to the credit union as well. So as I said during the presentation, we are working on an indicator for financial health. We are developing, and then we will have much more on the impacts and what happens. But we are pretty sure that the results are quite positive.
Sure. George, what about Cusco? Have you seen or can you track how much that support that investment has made a difference in terms of your credit unions in Kenya being able, and your SACCOs in Kenya being able to have some return on that investment, whether it be loans or other products and services?
Yeah, Greg. One thing that we do is to continuously advise SACCOs on proper lending methodologies or safe and secure lending, and in terms of how they appraise loans, how they engage with their members in terms of how they spend what they have borrowed, And the slogan is simple: save regularly, borrow and repay, borrow wisely and repay promptly. The word wisely there includes a lot of training on financial health. But what we have now seen, which previously was not there, is that we are starting to have excess cash stock of cash in the credit unions, meaning that there is prudence in terms of loan repayments and also loan uptake. That is what we have seen.
That's really interesting. You know, I'm reading a lot of the comments that are coming in too, that they feel like a lot of the things that were being talked about in this presentation will be able to implement. They'll be able to implement that going forward in their own credit unions. A question from Lapoule. He wants to know basically how your credit union systems and your credit unions manage bad debtors effectively. And obviously, no matter how much financial health, no matter how much support you give, you're going to have people who have debtors and that have debts. And how do you manage them effectively? George, I'll start with you on this one.
Thank you, Greg. That question is important. Now, in our system, we run a savings and credit. We don't run just a credit union, but a savings and credit union, or what we call SACCOs here. And that therefore means that your credit scores alone will not allow you to access a loan, but we have a hybrid of your credit score. The credit score we've just started using like 2-3 years ago, the credit score, your savings, and the social collaterals, who are referred to as guarantors. So in event of default, we fall back to your savings and the social guarantors. But before we go to your savings, we first of all go to the social collateral, who are actually the guarantors, fellow credit union members who had guaranteed you. So they will have to make good in proportion to what they had guaranteed before we chop off your savings. But still, we have got the leeway of either suing this person or the guarantors finally going to sue the person after they have made good. But that still, normally we make a provision of about 1 to 2% of the overall loan portfolio just to cover just in case. In event of death, we have got protection in terms of insurance and risk management services to ensure that the amount of defaulted loan are as minimal as possible. That's what we do here.
Really good, really interesting, really good models for others to hear about. Alexander, what about Sicredi? We've got a couple of minutes left. Can you talk a little bit about how Sicredi handles debtors?
Well, at first we try to avoid it. We know that it's not possible, but we try to avoid with being a consultant and try to help our members on which type of credit they really need and what's the purpose of it. So this is trying to avoid problems afterwards. So but when it's not possible and we need to mitigate, we have to check on case by case. Sometimes we extend the tenure of the credit and then it lowers the installment. So sometimes it's possible. Sometimes it's not, and so this is a case by case. Sometimes you need more. You have to be more covered by guarantees and so on. So it depends on the case by case. But our intention is always to make it possible whenever it is to our members to pay back the debt. That's the idea.
Sure. Well, I want to thank all of you. We're coming here to the end of the hour, and I know a lot of people have a lot that they are celebrating today and a lot they're doing in their own credit unions that have joined us. So I want to be respectful of that. But I just want to thank you, Steve, Alexander, and George, all of you for being here. Really great information that you all imparted. I think everybody got a lot out of it. So thank you so much. And I also want to thank our attendees. It always makes us smile to see so many new names when we look at the participant list, and we had so many new people here from all over the world participating in their first World Council webinar. So we really appreciate that. We hope you got a lot out of it. We do these on a pretty regular basis. Obviously, this is International Credit Union Day, so it means a little bit more today. Thank you so much again for joining us. And again, if you're interested in seeing this, reviewing this again, or if you just want to tell others in your credit union that they missed a great webinar live, you can view this webinar in its entirety on the World Council YouTube channel. That's going to be youtube.com/WOCCU, and it should be available later today. And then it will be up on the website going forward. So if you wanted to review, I know a couple of people asked about reviewing the presentations. It's going to be there going forward no matter what, so you can do it there. Thank you so much for joining us. Have a great rest of your International Credit Union Day, everybody.